Despite the fact that the coronavirus case numbers are only increasing, and in fact many people are pondering over a second wave hitting very soon, it's interesting to note that metal prices are on a steady uptick. In fact, within the metal space, it's actually the ferrous space that's really catching everybody's attention. Chinese iron ore prices, Chinese steel prices, Singapore iron ore prices, these are some of the most followed benchmarks, and they are seeing quite a nice uptick. A nice steady rally is what they witnessed in the year 2020. The key reason behind this is, firstly, there's amazing demand coming in from China, which is any which way one of the top consuming commodity countries. And secondly, some supply disruptions as well kicking in, but that's more so for the base metal space. But talking about demand in China, the recent macroeconomic indicators, particularly the July auto sale numbers and even the excavator sale numbers. Now, why excavator? It's because it indicates that if excavator sales are increasing, that means construction activity as well in the country is improving and increasing, which in turn bodes well for the key infrastructure raw material, and that's steel. So when these indicators are showing an up move in China, that too, you are seeing a rise combined steel prices as well. Furthermore, steel mills as well are in turn chasing this higher demand. They are increasing production to sort of cater to the expectation of higher demand, which in turn is leading to higher demand for iron ore. At ports as well, iron ore inventory is sitting. But interestingly, what analysts are saying is that the inventory is slowly declining, and shipments from two of the key iron ore producing countries, that's Brazil and Australia, seems to be on a bit of a declining trajectory. So that in turn is pushing iron ore prices higher. In fact, just so far this week, Chinese iron ore prices have posted the best week since May 2020. It's been a great rally, and Singapore iron ore prices as well had seen almost a 7 to 8 consecutive day of gain. In fact, Chinese iron ore prices are at $130 per ton. Chinese steel prices as well are at a significant uptick. But mind you, because of the fact that iron ore prices as well have gained very smartly, the steel spreads are a bit more constricted abroad. Now compare that to India. In India, it's only in the last couple of weeks that steel mills have finally taken a 2,000 rupee per ton hike in some HRC prices, maybe a smaller hike in rebar prices. But what makes India stand apart is the fact that our iron ore prices, the Indian iron ore prices, are at almost a 50% discounts to international iron ore prices. So that means spreads in India are definitely better. And not just that, even after this hike, we're still a couple of percentage points away from import parity prices, which indicates that maybe still steel mills, and in light of course a rebound in domestic demand, still have room to take a couple of more price hikes.